morning, everyone. On behalf of India Fintech Forum, I am Aditya and I have Mr. Mikhil Innani, the CEO and Director of Apollo Finvest. Apollo Finvest is a unique venture which builds digital lending infrastructure for the country, and it can be said as a AWS for lending. Welcome, Mikhil.
Thanks, Aditya. Thanks for having me on the show.
I, so, prior to Apollo, you co-founded FarmEasy and you have worked with companies like Hotstar. So please tell us about your journey from Hotstar, FarmEasy, and what is the vision behind Apollo Finvest?
Yeah, absolutely. I think over the last decade that I've basically been, in the digital space, in India, it's been quite an exciting journey, right? So just to give you some background, I graduated from CMU in about 2011 of December, and really post that across the last decade or so, uh, primarily been in the, digital and startup ecosystem in India. So very, very early on, in fact, I started off by being one of the early team members and product head at Coupon Dunia. Uh, so I was actually the fourth employee there. So very, very early, through the gates. And, I was very fortunate to obviously, work with a very, very exciting team. Uh, at that point in time, of course, that's where I met, Samir, who was the founder over there. That company was very pivotal because I learned a lot about, how do you build a really amazing team with fantastic culture. And, obviously back then, Coupon Dunia was one of the very, very early stage, ventures in the digital ecosystem overall in India. So it was quite exciting times. I think, after that, I, had a lot of learnings, of course, being one of the early team members there. And that's, after that venture got acquired by Times Internet, I basically started off with FarmEasy, right? So I was basically, the co-founder there, and I remember one of the best things about FarmEasy really is that I was able to take a lot of early team members at Coupon Dunia. I was employee number 4, and I think employee number 5, 6, 7, and 8. Joined us right off the bat as the first employees basically at FarmEasy, right? And FarmEasy is and was back then also an absolute rocket ship, right? Because our growth was just phenomenal. And in many ways I think the secret to FarmEasy, of course, being very, very quick off the gates was that team chemistry, right? Because a lot of us had worked together in the past, especially in the product and tech team. And that made, in many ways, it felt like, the company's not really changed. It's just a different project in many ways, right? And when you have that chemistry going, it's very, very useful, especially in a highly volatile and, ambiguous environment of a early stage company, right? Where a lot of things are changing. But if you have a team which you have worked with before, things become that much more easier. Of course, FarmEasy ended up scaling like crazy. I yet remember when we launched FarmEasy, right? We literally launched it, I think, overnight. We just made like a one-page app, right? And the only thing, by the way, when we launched FarmEasy, the app had a singular page which basically just, said one line, get medicines home delivered, and get a 20% discount. And all the user had to do was take a photo of a prescription and give us their phone number, right? That's it. We didn't take their address, we didn't take their name, we didn't take any information. And the real reason for that essentially was, honestly, a couple of reasons. One is we wanted to launch as fast as possible, and second is we wanted to see if this market even existed, right? Because a lot of people told us back then that who's going to buy medicines online, right? If you're generally sick, you just go offline and buy. There's so many chemists right around you within like a 10-minute walking distance at the very maximum, right? And we felt that was valid, right? But we wanted to basically test it out, and there's no best way of easier way than testing it out than just putting something out in the wild without spending a lot of time and refining it. And when we launched, within a matter of a month, we were doing like almost close to 10-15 orders a week. And even though that sounds really small at this point in time, back then we were so excited, right? Because I mean, this was just absolute word of mouth. We couldn't, spend any money online on marketing because you can't basically, market pharmaceuticals online, right? So a lot of those things, in a way prevented us from, just in many ways throwing money at the problem. And it forced us to find product market fit. And that's when we kind of realized that, actually the people who are placing orders, they're placing orders for chronic illnesses like diabetes, high blood pressure, things like that, right? And that's where basically, we found our North Star and completely focused on that cohort of customers, because we felt, that's the customers that, can become repeat customers for us. And, these are the customers which we can do a great job in serving and helping them manage their chronic illnesses much more smoothly, than any other experience out there. Of course, FarmEasy grew like a rocket ship. 2 years down the line, we raised like hundreds of millions of dollars. And, at that point in time, I got an opportunity, to take an exit. And that's when I came, and I joined basically Hotstar to, back then, I think my main motivation was, wanting to be in a company which is, scaling tremendously, right? And it's funny again, remembering, Hotstar, I think almost now it's been, I think around 4 or 5 years since I joined them, right? And these are like insane times, because back then I used to actually think that Hotstar scale was pretty impressive, right? They used to do about 6-7 million monthly active users back then. And, not a lot of people know this, but pretty much the entire tech out there was completely outsourced, right, to Accenture. And my mandate over there was really to build out the entire product technology team and, build the entire infra in-house, right? That was like a phenomenal adventure, right? Because, we went from 7 million monthly active users to today, what, 350 million monthly active users. Pretty much majority, right? 70-80% of the smartphone market in India has a Hotstar app installed. So, yeah, I mean, couldn't have asked for a better journey, like just in terms of raw technology scale and experiencing, the kind of, challenges purely from a technical perspective that we faced over there. It's unprecedented, right? I keep saying this, that from a technical challenges perspective as an engineer, I think, that's one of the best destinations in India to kind of, test yourself. Obviously, Hotstar got acquired by, and, Star as a whole, right? Majority of it got acquired by Disney. And I felt like that's a really, really strong milestone, right, to have accomplished. And that's when my entrepreneurial itch was really acting up. And, a couple of very interesting experiences that I had, both at Hotstar and at FarmEasy, really, gave me, I would say, the motivation and that germ in my mind to kind of get started with something like Apollo. And, it came from a couple of insights, right? One was when I was at FarmEasy, right? And we had like local pharmacies which were partnering with us. They used to earn like 20-30,000 rupees a month, like profit basically, before FarmEasy, right? And after FarmEasy, they started earning about 2 to 3 lakh rupees a month, right? Which is a substantial increase in terms of their profits. But one of the biggest, hindrances to their growth ended up becoming working capital, right? And basically, traditional lenders were just not ready to give these guys working capital because they didn't recognize the money that they were making off internet platforms like FarmEasy. And that felt quite absurd, because I felt like, okay, like, till a certain point, of course, FarmEasy was not established. But after we had raised, Series B, Series C rounds, I felt like, this is like a legitimate stream of income, which has been active for like, more than 2 years now, and it's only growing. So it just felt weird that nobody was ready to kind of provide them with working capital. And that's when I heard very common kind of problems with maybe restaurants working with somebody like a Zomato or a Swiggy, or even back then, people who were selling stuff on Flipkart and Amazon, they had similar kind of issues as well, right? With basically traditional lenders recognizing online income in general, right? And this problem even today is just extrapolated to another level, right? For as an example, the most extreme situation is if you're a blogger, or you're a YouTuber, right? Nobody kind of recognizes that income and doesn't provide you with any kind of loans. Even you struggle to get a credit card. And this just felt weird, right? Because probably the next decade is going to be about basically making money off the internet.
Yeah.
Um, The next big insight really came, which was more startling than anything, right? Was that Hotstar, where, I mean, 95% of our revenue came from ads, right? And obviously, we had to do a lot of demographic analysis. And, I was pretty ignorant back then. But, one thing which came to my mind was, just that 92% of India doesn't have access to formal credit, right? Which just felt absurd, right? I mean, there were 1.2 billion people in the country, and only 100 odd million people are available on the bureau, and probably like a fraction of that get access to regular formal credit. This just felt something felt systemically wrong, right? Um, and that's where basically I started thinking, how do you solve this problem fundamentally, right? And of course, there are a variety of ways of solving this problem, right? You could just start a fintech app and start lending, but having had that Hotstar experience, I felt like it's very, very important when you want an industry to grow, that you basically build the infrastructure layer very, very robustly, so that the companies of tomorrow, right, who will basically make sure that there is financial inclusion in the country, especially from a credit perspective, can build on top of you. And that's where the mission of Apollo came about, right? Where our goal very simply is to enable any company in India to start offering digital loans to their customers in a matter of 48 hours, right? And in this way, we feel once we lower the barriers to entry, right, to basically start offering digital loans, it's going to be a very interesting space to be, because that's where there's going to be an explosion of basically credit. And our thesis is basically, that's why we basically call ourselves the AWS of digital lending,
Yeah.
where what Apollo is really doing is we're building the operating system. So right from, of course, the NBFC license requirement to, of course, the entire backend technology infrastructure, right, which is right from your eKYC stuff to your disbursement collection APIs to even the entire loan management system that you require, right? Which we have a loan management system called Sonic, to even providing capital to help you scale your digital lending venture. All these three pillars basically form Apollo Finvest today. And we feel we're just getting started, right? I think we have a very strong thesis that we feel over the next 10 years, every company which has transactions happening inside it
Yes.
is probably going to start distributing financial service products to their customers. you know Obviously, digital lending is one part of it. I think I won't be surprised if there's massive distribution of insurance, massive distribution of even mutual funds for that matter, right? So yeah, that's a very, very quick overview about what I've been up to basically.
Thank you, Mikhil, for that comprehensive answer. And so here at Apollo, this is a listed entity at BSE. So
Yeah.
how different is this from the other two startups where you have worked?
Oh, it's a totally different animal, all
Oh,
right? So I mean, I think fundamentally, right? Running Apollo Finvest as a listed entity versus running a private company, right, is very, very different, right? Because I think fundamentally here, you have there's a lot more transparency, right? Your results are published every single quarter. You have thousands of shareholders. I mean, we literally have more than 5,000 shareholders in the company. So that's a very interesting aspect of it, right? Where there's a lot more openness in terms of literally, as an example, right? I mean, many times I have end up having conversations with fintech founders or potential, say, investors in the fintech space, and they really like what we're doing, and they can basically immediately after the call just go and buy our stock, right? Or if somebody doesn't like what I'm doing, right, if they have our stock, they can even sell it. So it's that level of liquidity, right, which this company basically provides from being publicly listed. I think that's very powerful, to be honest, because I think two fundamental pro points, I think, from having, or I would say three fundamental pro points from having a listed entity versus a private entity, right, are number one, a lot more transparency that you can deliver, right? And that's very important when we are trying to do what we are trying to do, because the credibility and the brand that you need to do and need to have, right, for building the kind of things and the infrastructure play that we are trying to do. I think the transparency and credibility is very important, especially as we partner with traditional NBFCs and banks as well, and even with fintechs who want to scale big time with us, right? It's very important for them to know that this entity is robust and it's not disappearing anytime soon. I think the second aspect of it is, of course, when you have so many shareholders, right? Like 5,000 plus shareholders, it's a blessing in many ways because you have so many cheerleaders, right? And the amount of emails I get and the amount of messages I get on LinkedIn, right, for people saying, "Oh my God, we love what you're doing," or "I'm an existing shareholder. Please tell me how I can help you, in whatever way." So there's a lot more people in many ways, trying to basically help you. And we've benefited a lot from the past, right? Because like there are certain shareholders who basically then, you know, honestly try to do marketing for us. They spread the message with other fintechs, you know, or they'll, help us in whatever way that they can, right? Maybe they know, somebody that would be a great advisor to us. So they introduce us and, that's the advantage, right? Maybe out of 5,000 per shareholders, at least 5 to 10% of them are fairly active, trying to help us in whatever way that they can. And that's very that's very amazing, right? Because in the end of the day, if you have the more cheerleaders you have, the more encouragement you get. And especially during any startup, right, there are ups and downs, right? And if you have people kind of really rooting for you, um, which there are so many, right? Imagine having like 200 to 500 people basically almost every month messaging you in some way or the other and saying that we're with you. That's pretty amazing. I think finally, the third angle, which I think is very important in, in general, this whole startup space in India, right, is liquidity finally, right? Right, liquidity in terms of outcomes, liquidity in terms of, creating wealth, right, for investors, for employees, for whoever is participating in this entire venture, right, is incredibly important, right? And we were very fortunate that we had Apollo Finvest, which was a listed entity, right? So a little bit of a background about Apollo is it's actually a 35-year-old company, right?
Yeah.
It was started by my dad back then. He had an IPO, right? And we just had this vehicle which was obviously with us, right? And in many ways, like my family's been in the lending space for 3+ decades. This is of course a very very different spin. We are more a infrastructure and a tech company with an NBFC license rather than an NBFC with with tech in it. Uh, but it's very important for us as an example for to also generate shareholder wealth and value, right? Because there are, it's funny, a lot of shareholders that we have today, they've been holding our stock for 30 odd years, right? Imagine that, right? Like, so for me, like when I thought of something like this, right, there was a little bit sentiment attached where I felt like if I can deliver huge value to come to people who held our stock for 30 odd years, and of course they've reaped the benefits, right? Like I think when I started in February of 2018, right, I think we were trading at about I think 11 to 12 rupees or so, right? Today of course it's upwards of 400 rupees. Um, so if I can generate wealth for people and for people who've been backing us for so many years, uh, I would there was no chance basically that I wasn't going to be delivering that value to them and repaying them back for all the faith that they've always held with us.
So, Mikhil, how is this pandemic different for you? Like, what is the new normal for you and your business?
Oh yeah, so I mean, I think COVID-19, of course, is absolutely a black swan event, right? I think it's very it's very real to say that nobody had predicted any of this stuff, right? So I think definitely, I think for lending companies, we are one of the sectors which has been heavily impacted, no doubt about it. Um, but I think in the long arc of time, right? I think one of the things that I'm really a strong believer in, I feel like overall it's going to be a huge positive, I feel, for the digital lending space in India, and in general I would say digital financial services overall, right? Because here's my thesis for all the participants basically involved in the fintech system as an example, right? So So let's talk about number one, right? The first participant, which is your traditional lenders. So your traditional lenders, what's basically going to happen, right, is a couple of things, right? So one is, they're going to become more cautious going forward because, their existing books would have been deeply impacted. From whatever studies we've conducted and, and seen the impact of moratoriums in other countries, right? Usually when you have such a long moratorium, it's very difficult for the money to come back. So people who end up adopting moratoriums, there's a good chance that, probably they won't be able to make their repayments even after, the moratorium basically ends, right? So it's going to result in basically, traditional lenders, especially who have had big exposures, to become extremely cautious now, at least over the next, 12 to 18 months, just trying to manage in many ways this chaos, right? But I think one, silver lining there is going to be that because of obviously COVID-19 and the restrictions it has in people kind of, freely meeting each other, it's going to force a lot of these guys to become digital. And what this means is basically they'll end up taking a lot of, they'll end up building a lot of digital infrastructure inside their companies. So the risk in many ways is going to be, very limited that they end up taking, on portfolios. Probably is going to be more contracted, but the advantage is that they'll take up a lot of digital tools to make their existing workflows, which they were doing maybe, pre-pandemic, they were doing in a manual manner. They'll try to automate and digitize all of those things so that they can A, cater to their customers more digitally, and B, even do more internal workflows digitally, because, meeting each other isn't as easy as it was, obviously, pre-pandemic. So that's a big, I would say this is a big opportunity for financial service providers in many ways, who are these, I would say digital infrastructure providers, right? Maybe somebody like an Apollo, or maybe even somebody like a Razorpay, Karza, all of these guys who are out there, right? It's a massive opportunity for all of these guys, right? Because probably pre-pandemic, it was very difficult to get, traditional lender on the table, to basically discuss them adopting your tool. But now I think they're going to be a lot more open in picking up these tools, right? So I think for infrastructure and financial services, infrastructure providers, huge opportunity. So I would say that, if you are one of them, I think you need to double down and make sure that, um, you take advantage of the situation, and you kind of, find, all of these, all of these enterprises who are looking for digital solutions, and, cater your products to be perfect for them in many ways, and onboard them, right? Because they're going to require a lot of hand holding. There's no doubt about it, because, it's a big transition for somebody whose DNA isn't, technology. But, that's where the opportunity really is, as a financial, say, technology provider in many ways, right? And I think the final participant, right, which is basically your, digital lenders, right? For them, there are two aspects, right? I think short term, there's a lot of pain, no doubt about it, because your existing portfolios again would be in trouble. My prediction is that almost 25-30% of these, digital quote unquote lenders won't survive the pandemic, because, their money is just stuck, right? And they just don't have the liquidity to be able to, survive so many months of this kind of turmoil, right? And especially with, money not coming back thanks to the moratorium. But uh, what the opportunity really is, right, is for people who are able to kind of, swallow this pain and just last through this, right? And that's one of the things that we always recommend our portfolio companies, is that, just survive through these times, right? And, if you survive through these times, right, there is light at the end of the tunnel. Because ultimately the opportunity for fintechs is going to be that, because traditional lenders are becoming that much more risk averse, it's an opportunity for these digital lenders to actually service customers, and, probably provide services to customers who before were just not accessible to them, right? Because they would have probably gone to a traditional lender. But now, traditional lenders are leaving customers on the table. So if you're smart as a fintech, right, you will actually, go that one level higher in terms of quality of customers, and not only establish a temporary, relationship with them for a few months by, say, offering them with a loan right now. But, I always suggest that think of a more holistic approach of how do you basically get attach yourself in the life cycle of the entire customer's journey, right? So don't make a temporary relationship, and obviously a temporary relationship will lead to a low lifetime value of the customer, right? Try to establish a relationship with a customer which has a longer duration, right? So that even say 18 months down the line, when maybe things become a little more normal, the customer is yet with you and yet values your relationship and continues to use your product, right? So that's really the challenge and the opportunity, where you have a higher quality of customers on the table unserved. Can you take advantage of the situation? And if you're able to, right, I am very, very positive about this space, because I feel in the long horizon of time, over the next 10 years, this will be in many ways known as a time where digital lending became the new normal. And I'm pretty sure, like, by 2030, right, just like 2007, when Flipkart's, Amazon's were just getting started, and 2000 in 2020 today, e-commerce is omnipresent, right? It's just normal to buy something online. I think in 2030, digital financial services will just become default in many ways, for a lot of people, because in many ways our children may be asking us that, why did you ever go to a branch, right, of a bank? It doesn't really make sense. It's going to become in many ways like how we think of the post office, right, where none of us really go to the post office anymore, unless we there is some work which is there which we really don't want to participate in, but we have to forcefully go. But probably in 10 years time, I think the number of branches are going to dramatically reduce. And secondly, I think there will be a time where people will question us that why did you ever need to go.
So, Mikhil, talking about APIs, could you tell the challenges what you face with the point of view of developers as well as in the business sense? So,
Oh, absolutely. I mean, in one line, really, I'll tell you, like, what we've learned in this business, right, is it's all about delivering ROI quickly, right? Like, fundamentally, I think the most important thing we've realized as a B2B business, right, is that the biggest superpower you can have is speed, right? Because fundamentally, when the opposite person comes to you, right, like, I think we live in a world where, in many ways, like, when you're doing a deal, or when you're working with a partner of any sort, right, like, people want to have that instant gratification. So, when it comes to APIs as an example, or any B2B relationship, right, that is out there, I mean, I think for me, I think the number one thing has been like, how quickly can you enable that integration, right? Or how easier can you make that documentation? Um, and, if possible, is there a way to even deliver that ROI uh, in a plug and play manner, where the person doesn't even have to do a whole full-fledged integration? But is there some interface that you can build where even a person who is not necessarily in their tech team but in their business team can experience that ROI immediately without even needing to disturb their tech team, right? So fundamentally, what I think people need to realize, I think, in the technology space, and as much uh, everybody wants digitization, right? But ultimately, I think what people have to realize is, in your team, your tech team is probably the most expensive team,
yeah.
right? And their bandwidth is the most limited, right? So, you know my 2 cents always on this is, and how we treat our customers is, how can I deliver value to them in a manner which is probably even the business team is able to start using my platform with zero integration also, right? And once they see the value being delivered, right, and they see, oh my god, it's so powerful, if they want to take it to the next level, that's where they can actually come and disturb their technology team and engineering team and take bandwidth off them to make this thing that much more better and make it completely automated to that extent, right? So we've really designed all of our systems, and this is something which is not never complete, right? Because obviously, imagine the kind of complex stuff that we do. If you have to build a UI for everything, it's not very straightforward always.
Yeah.
But wherever possible, we definitely push the envelope in a way that can we enable people going live in a matter of hours, right, rather than a matter of days, right? uh, and can we deliver a UI UX, or a just a front end for people to just literally type stuff in and use it on their own without them having to necessarily disturb their engineering team right from day zero, because we've seen typically once the the business team sees value, and probably it takes a couple of weeks, 3 weeks of them using your APIs or your infrastructure. Once they see that value and they themselves want to scale, you know that's when they themselves will go to their engineering team and tell them that, hey, like, we need to grow 10x from here, and it's just not possible with the interface that they've provided, because you know it's not automated. We require to do an API integration. That's when selling an API integration becomes that much more easier. Obviously, from a security standpoint, I think in general, when it comes to financial services, our at least 2 cents is, we care a lot about making sure that when it comes to every borrower, their their privacy is kept incredibly first in mind, right? As an example, any personally identifiable information about a borrower is something that we completely keep hidden from any of Apollo's users, right? Because the reality is, that's for the eyes of the fintech and their servicing team in many ways. And even within Apollo, right, unless it's a regulatory requirement for us to obviously have access to that kind of data, we keep that data completely. In many ways, there are a lot of data access controls built in, so that only the relevant people within Apollo, only if they require it from a regulatory standpoint, have access to that kind of information.
Okay.
Because ultimately, what's going to happen in India, right, over the next maybe I think COVID-19 has probably pushed this a little bit ahead, but otherwise in the next 24 months, I'm pretty confident that they're going to be very strong data privacy laws which are going to be coming into India, which are going to be quite similar, I feel, to what's already present in many ways in Europe
Europe.
and is being looked at across the world, right? And India is not going to be
GDPR.
far behind. Yeah, exactly, right. GDPI is something which is going to be uh, going to become common, in companies in India as well. And what we've tried to do, and I think this is where like a lot of my Hotstar experience really came in, is there we always thought privacy first in many ways, right? We had to think at that scale. Here, in many ways, um, you know, I knew what is the base level infrastructure you need to put into place, so that maybe if you don't have everything locked in day zero, but you're in a very very good position in case you really wanted to double down on that and make sure all your ducks in are in a row. You know, you basically have the foundation layer ready, right? And right from when we started building Apollo's platform like 3 years back, we've kept those things in mind.
So, Mikhil, where do you see the future of Apollo? Like maybe next 5 years? What do you see?
I mean, you know, I think for me, like what's fundamentally important, right, is basically financial inclusion in the country, right? So, I'm a I'm an optimistic person by heart. I think, I think every entrepreneur has to be that way, right? Because, if you start thinking pessimistically, I think, by default, you won't do a startup. Uh, but, by default, as being an entrepreneur, you have to live, 5, 10 years into the future and build for that today. So fundamentally, the way we think about, future is that, we think financial services is going to be a highly distributed play, right? Where ultimately, if you ask me, probably 5 years down the line, who's going to be in a better position to lend to a restaurant? Is it going to be Zomato, Swiggy, or is it going to be a traditional lender? I would bet that it's going to be, at least for certain category of loan products, is going to be Zomato and Swiggy. We are already seeing this in other parts of the world, right? Where you're seeing companies like, Square offer Square Capital to their merchants. And for people who don't know, Square is basically, it's very similar to, in a way, Razorpay, in India, but, majorly for, offline kind of, you know, POS machines, basically, right? We're even seeing, Shopify launch Shopify Capital, right? And all of this is basically, in a way, embedded finance, right? Where you're seeing, companies which have existing customers, have transactions happening within them, start offering financial services to them. Because fundamentally, the reasons are very simple. One is they have so much data about these customers that it puts them in a very prime position to be able to, understand risk associated with that customer. Second is, I think, customers really trust these platforms and love the user experiences that they offer, right? Like, we love user experiences offered by companies like Amazon, Apple, Google, Zomato, Swiggy. All of these guys are, companies who we like interacting with in general, right? We trust them in many ways. So I think there's going to be a lot of willingness from the customers as well to do those transactions. And I think third is, I think, the position that these platforms have in our value chain as customers, right? It's very, very interesting. um, and they will look at financial services as a way to deepen their relationship with all of their existing merchants or customers, whoever part of the value chain you kind of fall into. And I think ultimately the future is going to be where, in many ways, I don't like to use these buzzwords like neobanks in many ways, right? I think because I think this whole neobanking is very misunderstood. But fundamentally, I can tell you what's going to happen, right? And if this is the version of neobanking that people think, but I think ultimately, companies like Amazon, Apple, Google, Uber, uh, all of these guys, right? They already have massive distribution. Customers trust them. They have customer data. Ultimately, what's going to happen is they are going to all become distributors of financial services, right? Right from your credit cards to your debit cards to your, current account openings to your, digital loans to your mutual funds to your insurance, right? Just the way Apollo is building AWS for digital lending, I'm sure there's somebody out there, who is or should be building the AWS for mutual funds or AWS for insurance as an example. Because ultimately, right, to provide financial inclusion, especially in a country like India, you require, you know, anybody with an audience in front of them to be have the ability to start distributing them, right? That's when people will have easy access to them and start in many ways adopting and getting access to financial services, right? And what Apollo will be, right, in all of this is that Apollo will become the de facto platform uh, where any company looking to launch, especially digital lending now and hopefully financial services in general in the future, will look to Apollo Finvest just the way people look at AWS to launch an app or a website today, right? Like in the past, you required your own servers, right? But today, all you require is a laptop and probably a credit card, and you can launch an app or a website in a matter of an hour. I think that's what we think in terms of digital lending today. Where you just require basically a laptop and a credit card, right? And you can go live on the Apollo Finvest platform, and anybody really who has a transaction happening in front of them will be able to offer this. And the ultimate dream for us, right, in many ways, and this is where truly I think financial inclusion will be reached is, if we can create credit entrepreneurs in many ways, right? And what I mean by that is, imagine if there is one guy in some remote part of the country, right? Maybe in Bihar as an example, and he has a, maybe he's a sarpanch in a village, right? And he's basically somebody who knows the 200 people in and out, right? And he's well respected over there. And the way he knows those people, no traditional lender could ever could, right?
Yeah.
And the kind of social clout he has, right? Imagine if Apollo Finvest can provide a platform to them to start offering, maybe financial services, to his audience, right? Which are those 200 people, right? Maybe, in many ways, can Apollo enable, true democratization of credit in many ways where he could offer credit because he knows them more than anybody ever could, right? And they trust him, he trusts them. So that's where, financial inclusion would just be, amazing at that point in time. And if we as a company are able to, contribute to that, towards that vision, right? And toward that end state, right? That would be wow, right? That would be like something which would be uh, I mean, it gives me goosebumps when I talk about it right now. But I think that's really where our north star is, right? And we want to be that that company to truly enable democratization of credit in many ways across this country.
Okay. So this is the last question. Mikhil, what advice would you give to other entrepreneurs, especially in the fintech ecosystem or otherwise, during this COVID pandemic and after?
Oh yeah, I mean, I would just say ultimately, like, the most important thing I would tell you right now is a couple of things, right? So I would say one, be very patient,
Okay.
right? I think fundamentally building any business, especially in the financial services space, it takes time and it takes hard work, and you have to be in many ways believing in the power of compound interest, right? So I mean, don't be in a hurry, right? Because if you're in a hurry here, especially in the digital lending space, there will be, you will end up having a lot of accidents, right? Which you may not be able to recover from, right? So if you're looking, and this is the fact of life in any kind of industry that you enter in, right? Like, it requires a it requires kind of time and effort to create a career in anything, right? In many ways, a lot of people say that, in order to build a career in any space, right? This could be in the digital space overall, right? It takes 10 years, it takes 15 years, for you to be able to build a career in any space, right? And to find your superpowers, in any space, right? So fundamentally, my 2 cents would be that if you're entering financial services overall, prepare to be very, very patient. Second, my in general suggestion, and I tell this to all entrepreneurs, who are budding entrepreneurs, right? Ideally, try and get experience, if possible, in an early stage company, which is a fintech already, right? Because that's in a way a cheat code of being a semi entrepreneur, right? Or maybe experiencing entrepreneurship, but with your seatbelt on, right?
Okay.
Because
Yes.
basically the risk in many ways, right? And honestly, this is what happened to me in the digital lending journey, in the digital journey overall, right? When I was in Coupon Dunia, in many ways that was me being a semi entrepreneur, but having that seatbelt on, right? In many ways, quote unquote, I had adult supervision, right? So I could be like, going after ideas in a gung-ho fashion, but ultimately the risk was for somebody else, right? Which was Samir, who was the entrepreneur back then, right? So that was in a way my training wheels, right? And I learned a lot, through those, through somebody else's, experiences, right? I always recommend that, right? If you are very, very young and if you want to just get started with entrepreneurship and, that that's, where your calling is, spend a couple of years, maybe, find a startup that you're very excited with, try and find a gig over there. And the most important thing when you're finding a job in the startup space is actually not what their funding is and not how much money they're offering you, etc., but is about finding the right set of people to work with, right? So find the right entrepreneur who you feel you learn the most with, right? Or find the team, as an example, that you feel is full of superstars, right? Because the goal is very simple, right? And I am actually very simple when I think about this process.
Yeah.
Fundamentally in life, most importantly, when you're doing any gig, right, whether it's entrepreneurship or whether it is doing a job, right, ultimately you want to be surrounded by people who you know who make you smarter,
Yeah.
right? In many ways, like I try and at least early on in my career, I try to be in many ways not the smartest guy in the room, right? Because then you're not learning, other people are learning off you. So ideally, you want to be like, not the smartest guy in the room, because you're learning from the other people, and try and find people who you match in terms of wavelength. Because, your career is very long, right? One of the things I've benefited a lot from is I could go back to my past experiences and my past gigs to get those people to work with me in my future gigs, right? And even when it comes to entrepreneurship, like the number one rule I follow, right, is that, when you build a team, always keep that benchmark, that and ask yourself this every day, that the team I have today, would you take this team into your next company,
Okay.
right? If that answer is yes, then it's great, right? Because then you are surrounding yourself with the right people. If the answer is no, then you need to make changes, because ultimately, right, if you're not surrounded with the people that you can take into your next company, it's a problem, right? And the question is very, very same that you need to ask yourself when you're doing a job, right? If you're surrounded by A plus people, that's fantastic, because tomorrow if you're doing another job or you're doing, your own startup, you can take those people with you,
Yeah.
right? Or they would love to join you. And that chemistry is, magical, right? Because that chemistry is really the secret formula for, basically reducing the chances of failure dramatically in any startup, right? Because, the last thing you need in an ambiguous situation is the chemistry between the team, right? Because you're already facing problems which are questionable, right? And you have no idea how to solve them. But if the chemistry between the team is not great, then you're in trouble, right? So fundamentally, for entrepreneurs, number one, you know, decide what is the space that you want to work in, whether it's fintech, whether it's healthcare, whether it's online, media, whatever it is. Find a company or an early stage company, right, where you get along with the founder, you find the founder really smart, and you find the team amazing. Find a gig over there, learn of that for a couple of years, and then jump into whatever is next, right? Maybe being a again, taking a higher position or a leadership position in another startup, doing your own startup. But you'll have a lot of valuable experiences and knowledge to go off, thanks to the couple of years that you put in at a early stage startup where you got to experience a lot of those things with basically adult supervision.
Okay. I think that's all we have for today. I thank Mr. Mikhil Innani, the CEO of Apollo Finvest, for sharing his valuable insights on the journey and growth of his firm.